Hello, everybody, and welcome to the show today. I'm really glad you could join us. So today we're talking about a really, really important topic because it really has to come down to being financially fit as an entrepreneur. I can't think of many more things that are as important. So with us today is Tracey Bissett. Now, Tracey is actually on a mission to redefine the world's economic future by increasing the financial literacy of entrepreneurs, also known as financial fitness. Now, with over 20 years of experience in the financial services industry, Tracey can help entrepreneurs across all industries, both online and offline. As the founder, president, and chief financial fitness trainer at Bissett Financial Fitness Inc, Tracey helps her clients understand and improve their level of financial fitness with a goal of increased confidence using their financial skills so they can be successful in their financial lives. In addition, Tracey is a professor at Centennial College's School of Business and regularly leads speaking engagements to increase financial fitness awareness. Tracey enjoys giving back to the community and actively volunteers with Therapeutic Paws of Canada, United Way, and Junior Achievement of Central Ontario. Tracey, welcome to the show today.
Well, thank you so much for having me, Ty. I'm really excited to be here with your listeners.
Well, I couldn't have said it better. I mean, it really comes down to the fact that I think you hit on one of the most important topics when it comes to entrepreneurs, which is financial fitness. So when you talk about financial fitness, give us an idea of what that definition really means to you.
And so it can mean different things to many people. When we talk about it, generally, we hear people talking about financial literacy. And for me, that's always had a negative connotation in that you didn't know something. Like if you're illiterate, you don't know how to read. And I prefer to think about it just like physical fitness. You might be taking that first step off the couch. You're going to learn about different bank accounts. You might learn about budgeting, or you might be really sophisticated. You might be running marathons in the physical fitness. And now in the numbers, you might be doing cash flow forecasting and planning for growth in your business. And so everybody's on a spectrum, and it's never too late to learn, and everybody can do it as long as you have the will and the desire and are willing to seek out help.
Okay, so let's talk about this because there's so many things to jump into. You just mentioned our cash flow forecasting. That's interesting. Give us some more insight there.
Yeah, so for me, cash flow is really simple. You think about the money that comes into your account, the money that goes out, and the timing that it happens. And so if we think about a business that gets paid, they deliver their service or their product, and they deliver the invoice to the client, but they don't get paid for 30 or 60 days, they're going to have a delay in actually collecting the cash. Meanwhile, they've probably had to pay suppliers, they've had to pay employees. And so they're bridging that in and out of the money, and that's really managing cash flow. And it's really the critical piece to running a business. In my experience, I worked with TD Bank, one of the major banks in Canada, who's also in the US. And I've seen businesses go out of business in as quick as 90 days. They were highly profitable on paper. They had a lot of sales, and they were sales greater than all their expenses, but they never collected any money or not very timely. And if you don't have that constant source to fuel the growth, you're going to run into challenges. And I think you probably know, Ty, companies when they're growing are very, very hungry, and the food that they eat is cash. So you've got to be able to manage that cash to make sure you can keep going to do the things you want in your business.
So I like that you have this experience because, a lot of businesses fail and a lot of entrepreneurs don't understand why. So what is the reason? I mean, when it comes to cash flow clarity and that alone, what are some of the things that create that cash flow clarity? And what are some things you've seen in your experience where not having that clarity has led to then the actual business going under?
So most business owners get into whatever they're doing because they're so passionate and they have a skill set for whatever it is. Not often does the finance or accounting piece come along with it. And so they may be starting from a position of kind of learning on the fly. Some people will kind of put their head in the sand and think, if I sell stuff, it's going to work out. I don't need to worry about that. But the truth is you do need to learn it. And you don't need to learn it alone. You can certainly work with a coach. You can work with your accountant, look for free resources. There are all kinds of things out there. But the key is when you're growing your business, depending on payment terms. So there may be some other businesses where you get paid up front before you do certain things. We're talking about something like the real estate industry, or if we're going to buy some properties or we're going to construct, we're going to need to have some money up front as our down payment before somebody's going to give us financing. If we're constructing something from scratch, we're going to need to make sure we have a proper budget so that we can fund all of those things at the time that they need to be done during the construction. And that if there is any overruns on our construction project, that we have a backup source to cover that. And so we can look at cash flow from that perspective too. And so the biggest mistake I would see entrepreneurs making is, number one, ignoring it, thinking it'll go away, that they don't need to focus on it. And then number two, not really digging into it, outsourcing it or delegating it to some third party. And it's no problem to get assistance. You certainly can and you should if you need it, but you should always be accountable and take responsibility for your financial position, which can, at the beginning, mean asking questions, help me understand it.
You mentioned some of the mistakes. I love that you do. Is it different for startups, or what are some of the biggest money mistakes that you see people just getting a business off the ground are making?
They don't validate their idea is the first one. So before you go full-fledged into your business, I think it's really important to do some either focus groups, start out with a small pilot, make sure that your idea is sound, because you can put all of your savings, all of your resources towards something that may not work. And it's not that your idea might be bad. It might be that you need to pivot it and transition it to something a little bit different so that it's what the market wants and that you can actually make money at a price point that's good for you. And so in all communities, there's generally business centers where you can go and get free resources. In Canada, we've got the Business Development Bank of Canada. They've got business plan templates. They've got all kinds of templates. So you can start to put together the pieces, even if you don't have any training on how to do it, so that you can be successful to start. The second thing I would say is that entrepreneurs, when they're getting started, they don't get access to financing right away. They try to do it mostly on their personal credit cards and try to just piece it together. And the very first thing I did when I left my role at the bank, when I was getting my practice set up, was to go and secure a line of credit, go and make sure I've got the right bank accounts in place, get credit cards there so that I've got things when I need them, because it is challenging to secure financing when you are having trouble. So you want to make sure you get set up in advance.
Another thing, I think that's great advice, is something that we preach a lot. The other end is the saving more money of what you make. And I see that you talk about goal-oriented savings. So what is goal-oriented savings, and what are the benefits of that to entrepreneurs?
Well, I think it's really important to figure out, why did you start the business? What are your goals for the business? What are your goals for your life and your family, if you have a family? And then every time you're doing something, think about, are you bringing yourself closer to or farther away from your goals? And sometimes that can help you from making very quick reactionary moves, can help spending if you have a tendency to spend very quickly. And it keeps you focused on the big picture without trying to be too restrictive. But every time you're going to outlay that cash, is this required? Is this a need to have? Or is this something I just kind of want to have? And if I do outlay that money, I realize and I actually appreciate in the moment, it's going to delay me getting to my goal.
Another thing I think that you talk about that's really interesting is called money disorder. So what is money or disorder?
Well, there can be all kinds of different money disorders, and can be linked to your mindset. Could be where something happens to you, could be one. So maybe you go through a breakup in your life. It could be personally in your romantic life. Maybe it's in your business life. And all of a sudden you start acting out with some risky behavior. Maybe you're gambling. Maybe you're spending a lot of money on certain things. So that would be one instance. People talk about having midlife crisis. They go out and they start doing things they wouldn't normally do. And it usually involves money. A lot of those kinds of things are going to bring with it shame, and they're not going to let the people around them know what's happening. And so it's hard for other people to help out. So it can be from kind of a one-time thing to something that becomes something more serious. The thing that's really important to know as well is around money mindset. So the majority of people on earth have this scarcity mindset where they feel like there's never, ever going to be enough. And so, Ty, if you're getting something, that means I'm not going to be able to get something. Even if we're not in the same line of business, we don't do anything together, just fundamentally, we think there's never enough. And so I encourage people through the practice of gratitude, through regular daily things, to be happy for what you have. And that will increase those feelings of abundance. So things seem more possible.
What about poor spending patterns? I mean, I see a lot of people are kind of victim to that. How do you kind of unlearn those poor spending patterns? Because, a lot of people do that in their personal lives and they get started as an entrepreneur, and that's disastrous if they carry that over their business.
Yeah, you see a lot of entrepreneurs who almost have like a hole in their pocket. As soon as they get the money, they are spending it on something else, or they're spending it before they actually collect the money. And it's really, again, goes back to that goal setting. Also goes back to tracking your spending. The other thing I would say is that we form our views about money when we are so young. I've had a 5-year-old tell me that money is evil. What goes on in her house that makes her believe that, and that shapes her whole life. So whether she consciously recognizes it, your views and your behaviors formed by whatever happened in your household. So if it wasn't a positive situation or you didn't enjoy that, you've learned things whether or not you wanted to. So you've got to sometimes pause in the moment and kind of observe, okay, every time I have to pay a bill, I feel sick to my stomach. And maybe that's because you grew up with not very much money. Or maybe every time it was payday, our family went out to dinner when we went on a shopping spree, and then we didn't have any money till the next payday. So thinking about where does maybe some of this reactionary stuff and habit forming stuff come from, recognize it at first and then try to break those habits either through monitoring your spending. Maybe there's somebody you can keep accountability with. So if there's someone you trust in your life that you can say, hey, when I do this, can you just kind of say, let me know? Don't give me a lecture, but say, hey, did you notice you're doing this? Just so you can become really cognizant of it and then make those changes. Because you've gone into business, you want to be a success. So you want to make sure you're putting your resources towards the ultimate goals that you want to achieve.
And you say that, it makes me laugh because I think I've trained my kids from like the time they were old enough to remember that I work to make money to buy them toys. Because then if I ever have to work, like it justifies it. So to this day, if you go to my kids and you say like at 8 and 10, you say, why does daddy work? They'd be like, to make money to buy us toys. You'd be like, yes. But they've never given me a hard time when I've needed to work versus spending time with them. Although I always prioritize them first. But you say that and it does make me fun. It made me laugh because since they were very, very little, I always remember saying that exactly same thing to them.
They're going to probably say that till they're 100 years old. Why did your dad work? And then
Buy
that'll
us
stick with them.
toys.
And that's a nice thing. Yeah.
That's the whole thing. I just told you because, I started business to spend time with my family. And I think a lot of people do spend time with my kids because my parents worked all the time, So I always wanted them to know that in the case that I can't be with them because I need to work, of what I'm working for, and then it's for them. So you make me laugh because that is conditioned in my kids ever since they were very little. And like you said, probably will be for the rest of their lives. So why
and
is
you're probably teaching them a very strong work ethic as well. And they're seeing that you work hard and then you can get things, which is a great lesson.
Well, I don't know, because you say that and I think about it. I'm like, man, this might actually be bad that they think that I just work to make money to buy them toys. Maybe that's why they want so many toys all the time. So now you've got my mind in a whole different direction here. What about audits? How important is it for an entrepreneur to kind of conduct a financial audit of what they're spending it on, et cetera? How often should they do that if it's important? And what are they looking for? How do they go through that kind of process?
Well, I believe that entrepreneurs should have monthly reporting, and you should be looking at it monthly. So some people who are listening may not have that yet, and that's okay. If you've only got annual right now, take that next step to get to the monthly reporting. You definitely should be reviewing your sales and your expenses every single month, not spending tons and tons of time, but you want to be able to compare to last year. Is there anything that looks a little bit irregular when we look year over year? Is there anything that we're planning that's going to make our financials look different? And so I suggest having at least one money meeting a month. Certainly if you did it weekly, you can look at different aspects. But doing it on that basis makes it a little bit more friendly. You can look in your bank account, see how much money is coming in, going out, but just start there, get the basics. If you do have a bookkeeper, an accountant you're working with, you can ask them to run that audit, certainly once a year, to see if there's any places maybe you can get some cost savings. One area, depending on the business, that's getting a lot of people lately is people are signing up for all these apps and these subscriptions, and the team uses them for a little while, then they stop, they go on to a new tool, but you've still got those charges going through. And some of those can be fairly hefty. So you might be having some of your profit leak out by something like that, where maybe it's no longer needed for the company. So once a year, I do a deep dive and kind of run through every expense, see if you can negotiate with suppliers to get some cheaper prices on anything that's being provided to you, and then take it from there.
Yeah, and I can't tell you how much that's helped our margins doing exactly those two things. Every 6 months, we do an audit. We go through every piece of software, every subscription, every cost we have. We always end up cutting hundreds, if not thousands a month. Mm-hmm. And then we go through and negotiate with the sources. And I got to tell you, like, we use some really big services like Infusionsoft, and I guarantee we're one of the lowest paying customers there, because every 6 months we ask them if we could save money, and we do it even on the personal side. Like I'm
Oh, yeah.
blown away by calling my cell phone provider or calling my cable provider and asking that question every single time I call. When I do every 6 months, they have something that they can do that saves me money. It's just, those are such great tips to be able to improve margins.
Yeah, and so if you grew up with kind of this fear or aversion to money, you don't want to have those conversations. But just like you said, all you have to do is ask. The worst they are going to say is no. And in most cases, they're going to do something and you're going to be better off for it. And you may need that money to hire a new employee, to grow your business in some other way. Maybe you want to pay down debt. Maybe you want to take it out actually as a distribution as a shareholder. So all kinds of things you can do with that money that doesn't need to be kind of a profit leak that's going out. So good on you for doing that consistently, because most people are not doing that.
Yeah, and an example of that, we had an appointment scheduler that was really high expense. When we asked him, the crazy thing is that if we paid annually versus monthly, and we used it for years, it saved us 40%. I mean, it's like $400 equivalent a month, like $5,000 a year we saved, and that's just one expense.
Mhm.
So it's just, there's so much that you could do to, like you said, fix those leaks. What about financial mistakes? We talked about some financial mistakes entrepreneurs make. We talked about financial mistakes that startups make. Do you see any that are unique to people transitioning out of like a work life where they're used to having an employer and a W-2 income and then getting in as entrepreneurs where they have a hard time financially making that adjustment, where they're accountable for themselves? They don't get that solid paycheck.
Absolutely. And so a couple of the big things, depending how they're going to set up their company, they may not be keeping enough reserves to pay taxes. That's a big one. And so often they're going to get stung with this huge tax bill year one, potentially, and they won't have any extra cash around because they weren't thinking about that. So I would suggest talking to someone who knows about starting up businesses before you do that, to kind of get a checklist of what do I need. Number one, I should get a business bank account. I shouldn't be just commingling everything with my personal account. Keep it straight, keep it separate, keep all my receipts, because most people do not. And then they find out the hard way. It's going to be challenging to get that information together. Um, and so taxes is a big one. The other thing, even just planning for a rainy day, especially if you're doing things on contract, maybe you do consulting, or it's just, there is some time between your sales. You want to make sure that you've got an emergency fund, just like you would have in your personal life, so that you can weather those storms, especially if you have employees, because they want to know that they're going to be getting paid. The other thing I would say too is most people, when they leave their jobs, oftentimes they are very senior in their roles. So they're very expert at certain things. So when I left my role at TD Bank, I knew a lot about lending money to companies, structuring deals, great at risk management, but I had to learn more about sales. And I had to learn about marketing, and I had to learn about a whole bunch of other things. And you can't be too humble, or you got to be able to ask for help. You got to find the people who are going to support you. And you may not have those people in your life because you've been surrounded by other people who have careers in companies working for other people. And you've got to go out there and get a network of people who are doing what you're doing, so that you can get the support, because it can be challenging and you want to have other people that you can count on just for to commiserate with you. If you're having a bad day, you want to talk to people who can give you advice, but just so you got a support system to prop you up too.
Great advice. And you talk about this need for knowledge, which I think is important. And like you said, you talked about just a handful of hundreds of things you have to get knowledge on as an entrepreneur. So you don't have a lot of time to look around everywhere to try to get the resources you need. How do you get the financial knowledge that you need right from the beginning to start doing the right things right from the beginning?
Yeah, absolutely. You would either talk to a financial coach like me, you could talk to a bookkeeper or an accountant, and they could very quickly go through a checklist with you of the things you want to do to get yourself set up properly. If your financial acumen is not where you won't need it to be, if you've never read an income statement, so your sales and expenses, you don't know what a balance sheet is, you can very quickly, over the course of a couple months, bring your financial acumen from here to here. And it's not overly painful. You don't need to be scared. It's just one step in front of the other, working with someone that you click with, because they've got to be able to explain it in a way that makes sense to you. So you should never work with somebody who cannot explain things in terms that you understand. Don't be fooled by people using jargon or talking over you or at you. You want to find somebody that gets you, can explain it in a way you get, and you can move forward and actually see that transfer of skill from the person over to you. And then you can use your numbers to grow your business and really act confident and make decisive action.
So what are some of the basic, and you've covered many, but what are the absolute must know things when it comes to financial? Because look, as an entrepreneur,
Mhm.
I think I speak for many when I say that sucks. Like we cannot stand the financial side of things. Like it's horrible. I refer to it as torture sometimes, right? Because our minds don't work that way. We just want to create stuff and we want to go sell it. And if we're selling stuff, we're happy. And I mean, I speak for myself and I think I speak for a lot of others. So like give me the bare minimum of what I must know, where I must go. I know I need income statements. I need balance statements. Like what are the 3, 4, 5 things you really need to know? And you just focus on those 3 or 5, you should at least be much better than the people that don't focus on any of them.
So number one, be able to read financial statements. So just to be able to take away what they mean, be able to interpret financial ratios. It's really important that you understand them because when you're dealing with different stakeholders in your business, you need to know what lens they're looking at it through. So if you're dealing with suppliers, employees, any financial institution that's lending you a line of credit or overdraft, they care about liquidity and making sure you have cash to pay your bills. On the other hand, if you want to buy a building, they're going to be looking at, do you have the ability to repay the debt over time? So they're going to look at things like your debt serviceability, your interest coverage, how much debt to equity, what's your capital position. So knowing the ratio is really important. Understanding cash flow. So as I mentioned, when the money comes in, when it goes out, and the timing that it happens. So being able to do that forecasting and then being able to use it to help you plan. How can I get that new piece of equipment I need? How can I acquire that other property? How can I get that new staff member? Okay, if I defer this expense for 2 months, I can make it happen now, or I'll have more cash reserves in 3 months, so I'm going to wait for that. And once you've got that built, you should be able to pull it up, make some quick adjustments, 5-10 minutes maximum. I'm not thinking you need to spend your whole days on these things, but just move forward like that. And then find someone trusted that you can talk to regularly, that you know is always going to have your back. You can ask your questions that you might think are silly or stupid, and just have that go-to person so you can really get what you need quickly.
So who is that go-to person? There's financial planners, there's financial advisors, there's financial coaches, there's accountants. Like who do you go to?
Again, it's going to be where you think you fit. I would say financial advisors, financial planners are going to be more so on the personal side. So if your bigger concerns are on your personal financial position, that's where you want to go. I would say a business coach, accountant, or bookkeeper to help you with the other pieces. So they can help you bring up that knowledge and then they can be there to be that resource ongoing. Lots of coaches will work on retainers. So you can have a couple hours set out a month just to pick their brain, just to bring forward any questions that you have. In the beginning, you may want to have your monthly money meetings with them so they can walk you through what you need to be seeing and saying, hey, did you notice these things were showing up in your statements? Let me show you how I see that, and let me show you how you can see that in the next month. So somebody you trust and that you get along with.
And then how do you manage your cash flow, the finance? I mean, what kind of software, some people use QuickBooks, for example.
Mhm.
What kind of tools are there? What kind of resources, what kind of software should you really be considering?
If you're just starting up and you're a pretty small business, there's nothing wrong with using Excel. You can download a really simple template from the internet. You can just ask Google what to give you, and it doesn't need to be more complex than that. So you don't need to be afraid of learning very sophisticated softwares. QuickBooks is a great software to use. The cash flow tool is still coming along. So I still encourage people to be able to do that what if scenarios on Excel. And then certainly if you're going to be a larger company, you're going to have a bookkeeper who does those entries for you, who then presents it to you as management to just review and make the conclusions. You don't have to do the inputting.
So we talked about a lot of great advice that you had, and we've also talked about a lot of mistakes. But what are some of the smartest things that you see that entrepreneurs do that have the biggest impact financially for them?
They're setting themselves up for success. They're talking to a bunch of people, developing that checklist of these are the things I need to do when I start. This is what I should know. These are the bank accounts I should have. This is my remittance schedule to the government. All of those kinds of things. They're getting advisors in place. A lot of businesses, when they start, if they feel they're going to grow quickly, they will develop a board of advisors that they can consult for different aspects of their business, not just the financial. They're arranging financing before they need it, which is a key to success. And they're understanding how to communicate with the banker. So often I will tell people, you're not going in there to talk to your best friend. You need to be prepared. You need to be professional. You need to be organized. If you've had some challenges in the past financially in the company, explain what led to those and what you're doing differently now so that's not going to happen again. the bank will typically be looking for a cash flow forecast. So if you've already got your own ready, it's not an extra requirement. They're going to think higher of you and your management credibility because you have that to provide to them. So building those relationships before you need them, making sure you've got those people in place. I think all of those things combined will put you in good stead.
You speaks along the line, and our podcast here is all really, a lot of it's focused on how to get money for a business. So along that line of things you just mentioned, what are some other things that are very important for entrepreneurs to know when it comes to setting themselves up for success and either getting credit cards, getting credit lines, or getting loans, whether it be an alternative lender they can find online or a big conventional bank?
Yeah, I think you want to understand and you want to survey the market. You want to look at all of the different people and sources that you can receive the funding for, and actually figure out what are the advantages and disadvantages to each. So it might be easier to get money from an alternative lender, but is that alternative lender going to say in 12 months, that's it, you got to find new financing? We've decided we're not going to finance this business anymore, whether it's just industry or it's your business. So weigh the pros and cons. I would say you're going to get your cheapest rates at a main bank. You're going to go to alternative financing. You're probably going to pay some more, which you might have to do in the beginning. So be realistic and do your research. Again, you don't need to do it alone. Talk to friends, talk to colleagues. And again, there will be entrepreneurial centers in all different communities. Tap into those resources. They generally have referral partners that they work with for financial institutions to help entrepreneurs get started. So learn everything that you can. Ask for advice, ask for recommendations from your accountant, bookkeeper. And if you can get an introduction to the financing source from somebody you know and trust, that's going to set you up well too, because you're already starting from a position of, I don't know this person, but I do know that I can trust them. And you're never going to delegate or just allow them to be responsible for what's going on in your business, but you do want to take their counsel and their advice and reflect on it and see what you want to do.
Tracey, any advice around budgeting for a business? Because, we don't like to do that as people, let alone a business, but
Yeah.
it's pretty important. So what advice do you have there?
Well, if you're a solopreneur and you're working alone, you have to do it yourself. You, again, could do that with a coach or a bookkeeper and actually just sit down and map it out together. To do an effective budget, you actually have to look at the real cost of things. So you can't say, well, I think my cell phone bill is going to be $5 a month, and so I'm going to put that in my budget. You actually got to do a little bit of research to figure out what's accurate. Figure out what other companies in your industry are doing. Certainly, if you had access to a coach or your accountant, there are financial statement standard ratios by industry that are out there. So that can help you figure out, okay, how much should my selling expense be? For my industry, it's generally this percentage of sales. And so you can get a feel from that. But that doesn't mean that's what yours needs to be, but it's an external point you can reference to help you get on your way. Once you've got the initial budget done, then you want to really make sure you're tracking actual to the budget. So I highly encourage entrepreneurs to, if you're working with QuickBooks, put your forecast in for the next 12 months on a monthly basis. Every time you look at your monthly profit and loss, see how it bears to your projection. If you're off, that's not the end of the world. Sales could have moved from one month to another. Maybe there's something going on in the economy that's affecting everything that's really beyond your control. Maybe collections were just a little bit slower. Maybe you had to pay some expenses sooner than you thought. Doesn't mean it's bad. You just want to know the why. And if it's something that you should have known or could have known, then you got to course correct. So you don't wait until 6 months after year end to get your year end statements from the accountant to say, uh-oh, this doesn't look so good. What should I do now? You're really on it every month so that you can be proactive as opposed to really reactionary.
Talked about a lot of great stuff. Other things that we should talk about when it comes to really being financially fit as an entrepreneur?
Making sure you get paid. So I see a lot of entrepreneurs and I work with a lot of entrepreneurs who do not consistently get paid. And I don't believe that you generally go into business not to get paid. You're usually doing it for more flexibility, more freedom, and you do want to support your lifestyle. You probably want to create a financial fortress for yourself and for your family, and you can't do that if you don't make any money. So it all comes back to, do I have a good idea? Is it something the market wants? If not, how can I shift it so that they do? Am I charging enough? Consistently, entrepreneurs do not charge enough for their products and services. And the reason that is they're generally not checking out the cost against the price they're charging, and their margins are really small. So you've got to dig into that stuff. And there usually is more room in the market to bring your prices up a little bit, especially if you can distinguish yourself as a quality supplier, somebody who's unique from that aspect. So to focus on those things would be really important.
Tracey, as we get ready to wrap up, is there anything that we haven't covered that we should cover that you think entrepreneurs really know to have the best financial success in their business, to be prepared to make the transition from a working life to an entrepreneur, or improve their profitability as an entrepreneur, or just do things right as a startup?
So I would say certainly you've got to be open-minded. And if you come from an upbringing where you were stressed about money, didn't want to think about money, you've got to get that in check. If not, it's going to be a big obstacle for you. And so if you're open-minded, you can be curious. I encourage people to think of it almost like a financial detective. Try to make it a little bit fun. I know I think it's fun. I know not everybody thinks it's fun, but making money, delivering a great product or service to your clients and making them happy, that's what it's about. And so the profit piece should be there so that you can feel not only do you get that intrinsic and emotional satisfaction from helping your clients, but you also get paid for it so that you can do the things in your life that you want to. And so that may be going on that vacation with your family. It may be having money for them to go to post-secondary when your kids get older. It could be that you really want to give money to charity, or you want to support other business owners. But you can't do any of that unless you make money. So be organized, find people to support you, and have an open mind, and it's not so scary. Just take one step forward. If you can do one thing today that helps you, that's great. Do something else tomorrow and take small steps to put all that great stuff in practice.
Tracey, where can everybody else go to that's listening and watching to learn more about being financially fit?
Great. So best place to connect with me is on LinkedIn. So you can find me, Tracey Bissett, there under Bissett Financial. And I'd love to leave you with a gift to help you get started to make it easier for this transition as you are taking control of your money. So if you go to cashcoach.biz, you can download a monthly meeting agenda for your money meetings. And so if you're a solopreneur, you're going to have this meeting with yourself at a minimum of monthly. If you have a partner, you're going to do that as well. I would suggest weekly just to get started and you get into the routine. Book it in your calendar. Make sure it becomes a priority. It's just as important as sales and marketing and all of the other aspects. Everything deserves its attention. So go to cashcoach.biz to download that, and it will get you started today and give you ideas on really where to start in a very less scary, easy to start format.
Tracey, thanks for coming to join us today.
Thank you. It's been great, Ty. Thank you so much.
So everybody, make sure you go grab your money meeting agenda at cashcoach.biz. That's cashcoach.biz. And make sure you grab the money meeting agenda, everything you need to know and be doing on a monthly basis to make sure that you are financially fit as an entrepreneur. Look, it's so important. I mean, Tracey said on so many things here. One of the points I loved near the end was that entrepreneurs don't charge enough for their products and services. And just that one piece of advice, for example, I can tell you, we raise our prices for about every 6 months. You know what happens to our sales? They go up. It's crazy. So again, there's this one little nugget of so many she's given and many more you can get. So make sure you visit cashcoach.biz and make sure you grab your money meeting agenda. Thanks everybody for tuning in. Don't forget to visit cashcoach.biz. Have a great day.